All right, what is going on? Can y'all hear me? What is... Oh, okay. Yeah, the morning is what it is right now, y'all. I am here. Going through it. All right. That's not it. 1, 2. 1, 2. Nope, it's not doing what I needed to do. 1, 2. Can you hear me? 1, 2. All right. Well, according to the screen over here, things should be going right now. I wish somebody was in here so they could tell me if my mic is up. All right, I'm gonna try to look on. I'll let that go. All right. Ooh. Well, all right. Cool. Thank y'all. All right. I guess it's something on my end, but nonetheless. Hola, hola, buenos dias, buenos noches, buenos tardes, depending on what time of day you see this. My name is Trekkw2ks, and welcome to another episode of Week in Crypto, brought to you here on the Gem of Crypto Network. If you don't know, again, I'm Trekkw2ks. The basic idea of what I do is cover crypto-related news stories that happen over the weekend, which is a Friday to Sunday, pop it out Monday morning. Usually, it ends up being a pre-record that I do late Sunday night and pop out 08 Monday morning. And so life has been lifing over here for me. And just, I don't have the schedule that I used to have where I could be up until 2 a.m. putting together a segment. And so it seems as though these live Mondays might be more of a thing in the monthly rotation as I work at getting this new schedule better. But nonetheless, I got some stories. And yeah, I definitely missed some stories, but I got some things to cover, and I'm gonna try to be kind of tight with it as far as I don't want to run into the Stat Bros segment. So some things I might blow through, some things I might sit on for a little minute. But nonetheless, I got a couple of things that kind of caught my ear, as I say, the things that scratch my brain, right? So first story and side note. Okay, let me jump back. House cleaning. 1, we are in the tax season. It is highly recommended you do your due diligence and research for how you're dealing with your tax setup if you are in the U.S. jurisdiction. The GOJ, the IRS folks is playing no games. And as such, this segment is brought to you by CJ the Smart Guy, who is, in full disclosure, my actual CPA. Link for him will be in the description on this. And I don't say this to you as though you're supposed to have to use him. There's no referral link. There's no kickback on my side of it. It's just like, if you're doing your due diligence, you want somebody who actually been in the space and know what the hell they're talking about. So that's how I'm going to leave that one there. And yeah, that's the house cleaning part of that. Other thing to note is, thank you for the folks who are jumping in right now. I appreciate y'all. I know I've been messing up on the time. Thank you to the lurkers out there. Thank you to the scammers out there. I actually now wonder, how does doing it live versus the pre-record affect the scammer folks? But nonetheless, let's get into this stuff. First story is off of Coin Paprika, which basically is a Binance related story. So Binance executive moved to secure jail in Nigeria after colleagues escape. So here is how this breaks down. These two executives from Binance come to Nigeria because their version of the like financial subcommittee for their regulatory body was like, hey, you guys were doing unregistered securities and illegal activities. Somebody needs to show up and like start making things right. And so they show up. The conversations don't go too well. They get put on house arrest. One dude, he does what he does to make sure he's out of the jurisdiction. The other dude is still stuck. And then they move him from house arrest into a secured facility. So now he's feeling the clink clank. Okay. I had mentioned this story a couple weeks ago when it first started happening that Nigeria started pushing on Binance. And I seen some other stories popping up with different exchanges and Binance again. Here's what I'm calling the trend, like the trend of what I see going on. Other countries that have a sizable activity of whatever exchange, their regulatory group and their executive departments, like, well, executive, how am I saying this? Executive, like legislative departments or legislative committees and their financial agencies are now starting to see that there's blood in the water, and they're pressing on these exchanges and these varying types of crypto related companies, because it's like, well, the US led the way. They was able to get a non-US citizen to exit a company, take over the company, and then they was able to put a federal employee in the company. I mean, we might not be trying to get an actual federal employee in the company, but you damn sure we're going to start poking and prodding and bullying so we can get our cut. And that's part of what I think the trend is going to be going forward. And it's crazy. Like, I honestly still think Binance is on a slow chokeout. And I honestly still do think Binance is being used by the US in a proxy situation to mess with X amount of the Asian and European market, Asian market in particular within the crypto space, especially because of how pro US and pro IBS the new CEO dude is. Like, and if you've ever listened to me in past years and stuff, you know I haven't been the biggest fan of CZ, but CZ wasn't like towing the line the way this new dude does. This new dude is definitely towing the line heavy. But nonetheless, this story, and then there's another story I'm gonna have come up that like is, to me, we're past indicators. We're seeing trends of other countries are going to start doing a thing to really get their cut out of these crypto related businesses. Other thing to note, that it's really messed up that the dude came to talk and then it was like, well, house arrest. Wait, what? I'm just an employee. I'm a low man on the totem pole, but your title says executive, sir. that means you're not a low man on the totem pole. So you can't play both sides of it. Again, I think it's kind of messed up that they're leaving their people out to dry like that, but it is what it is. Nonetheless, moving on to this next story. Yeah, it's wild, bro. What's going on, Jay? Everything. What's going on, E? Debnam L. What's going on? D. What is it? On the move? Okay. And Kai Linder and Megan, thank you. So that happens. Now, here's the next story. Stateside. Coinbase cleared in lawsuit over crypto transactions. The basic thing is there was that class action lawsuit that was brought by a couple of crypto holders who was like, oh, well, Coinbase violated the securities law and they were selling unregistered securities. If that don't read like you as a plant, I don't know what does. But the point to this is, excuse me, I think going forward as an indicator, at least within the American jurisdiction, unless somebody comes up with another case to be like, yo, that first case was wrong, I think this is going to change the landscape. Okay, let me tell you what happened first. Coinbase won the argument that we're not selling unregistered securities on secondary markets. So the plaintiffs in this particular case lose making that claim. What I would wonder going forward is, now that you've set this way for retail level folks, my question is, how is it then going to play over for the commercial financial level, like the commercial Wall Street level folks? In that, the idea that there's another, how to say this, and I might be really wrong in how I'm understanding this, but I think that if they, oh, thank you. I'm horrible at names, D. So the fact that I did, thank you. I appreciate that for saying that I did good. I used to have a first E7 who used to say that all the time when you did something like, "You done did good. You did good." But anywho, so you have it that secondary markets, as far as Coinbase is concerned, and their users, they're not gonna get in trouble going forward. But we'll see what happens, because somebody else could make another lawsuit. One of the federal agencies could push the issue again, which then makes me wonder, well, how would this play out in their SEC related stuff? But again, my other question is, what would this mean for the commercial side folks, Wall Street level folks, who then look to play around in a more official or a more in public capacity in the secondary markets? Granted, we have rules and regulations already in place for how Wall Street financial institutions and banks and everything, and I got a bank story too, are supposed to act. But if you've been in the space for a while, you know that X number of these parties and entities have been playing around on the back end for a while, and they're now coming out public about, all right, well, yeah, Fidelity, we've been in the mining part of it for more than 5 years, damn near, I think 8 or something years, right? JP Morgan, we now have the official trading desk thing. Like, so my point being is, I'm more curious on how this is going to be on the commercial Wall Street side versus what it means for the retailers. Because arguably this then means there potentially could be more manipulation and more price fluctuation and more trade fi influence into like secondary markets and DeFi space, if you're following where I'm going with that. Jumping on to this next story, because time is time. There's a story, and again, links for this will be on the description side of it, right? Out of the Cryptopolitan, and the title, I thought they were going to say something, but they didn't really. So it goes, concerns as the C state, CCP, red flag with a yellow star, and the U.S. continue to stack up on BTC. What does it mean for decentralization? The article is making the argument that if China has more crypto or more Bitcoin than the US, that's a bad thing. If you really get how decentralization works and financial freedom and economic sovereignty, if either of these governments have the majority of the pot, it is a bad thing because of how governments and centralization works. But they do this underhanded way in how they're telling you it's a bad thing if China does it, but don't worry about it if the US has the majority, which is currently what apparently the numbers are. The US has the majority of it through the DOJ. The other thing to note in now this article is, and this is the thing that I've been kind of saying, where it's just like, you got to read between the lines as far as like, well, what are you saying and what does it actually mean? Once I get past the gobbledygook and soup salad, word salad of what you're saying, what do these words actually mean in concise, condensed form? We want to move your disposition that those or that country's government having the majority is bad, but it's okay if it's your country's government. No, it's not okay for any government. The other thing to note in this article is they don't actually tell you what agency within the C state, what department is the one that's actually like our version of the DOJ or the marshals, who is actually holding the purse strings of this quote Bitcoin or whatever crypto it is. So it's throwing out words at you to give you fear against that government, but they're not giving you solids, and they're painting the DOJ in this positive light. These are the things when you look at these stories for like how the fear mongering goes, you got to take it all with a grain of salt, right? Even for the shit that I say, like you got to take it all with a grain of salt. I just wanted to throw that out there as far as like we're gonna see more ramping up of that government bad, but your government good, and they're not gonna give you specifics. Well, what department or well, what are they doing with it? And I've been saying it for how long now? The C state has been pro crypto. It was just they wanted to move way more different in how their regulatory sandbox and playbox or rules were going to go for the companies and for the people. And still the same thing, because I even have a Hong Kong story. Hong Kong is the little interesting sandbox. So yeah, again, link for these will be in the description. Jumping into this next story. This one is on Bitcoin Systemi, which goes towards the title of what this episode is, which I said Solana broke again, ETH Killa my ass, right? So apparently over the past week, title goes, majority of transactions in Solana, Sol, network started failing. What's the reason? This article is interesting because they do this thing where they try to explain that a fail, exactly, do your own due diligence and research, exactly, Hollywood way, fam bam, yes. So this article is basically trying to redefine what fail means, which is supposed to be the opposite of pass, right? Which we generally understand has positive and negative connotation. Pass is a positive in terms of does something do what it's supposed to do or does it not? And then they're saying, well, the way Solana works is it doesn't have mempools. It's supposed to be that the transaction goes directly to the other side and then it gets processed. If it doesn't get processed, you know instantly that it didn't process. So you have the one part of this paragraph that says, here's why fail is not a bad thing in Solana. Then you have this other part that says, hey, even though the transaction itself did not go through and was processed from like party A to party B or wallet A to wallet B, the transaction fee is still taken. In my mind, that seems like a setup. In my mind, that seems like a wait. So I came to you to do something. I can't do it, but you still gonna charge me? Which is on par with what ETH does, right? Like a transaction fails, guess what? You still paid that transaction fee, even though you can manipulate like the what is it? The amount, the rate for how fast or slow it goes, whatever. But the way that they're trying to do this and make it seem like it wasn't a bad thing, that the network was basically being overwhelmed and backlogged. And what it boils down to this is they implemented a new upgrade called Quick, and it's the Agave Validator. The bottom line was the slippage was too much. So transactions weren't being complete because the price difference between the different markets was too much. In my mind, again, I'm not a Solana coder. I'm not an ETH coder. I'm not a coder in any functional way. But in my mind, that would indicate to me that you probably have a sizable portion of the market using bots in how they're trading. And the software that they're trying to, the implementation that they're trying to do is not able to deal with how fast the bots are moving. Because you got the exchange using the bots, plus you have the end users trying to do their bots on the decentralized or the DeFi related exchanges. And then you have the traditional like CeFi, Solana stuff, right? So if you have more people who are moving, or more, how to say this, there's more activity on a automated setup that is moving faster than the software that you are trying to use to stabilize how these transactions are happening and pay enough attention to the price fluctuation. Guess what? You're going to get overwhelmed. This is part of one of the reasons why you have mempools on things like proof of work within Bitcoin. Because yeah, eventually your thing gets your transaction gets processed and it might take a while, but yo, if you know, you know, exactly. You know what I'm saying. Like, and of course, what did they do? They turned it off again. They did the corrections that they did, and then they were like, all right, click back on. Like, all right, let's try to go back. Like nothing happened. It's like, but dog, what you're not addressing is people are using bots to game the DeFi exchanges in your ecosystem. That's why the slippage issue is there. That's it. But that's not what we're going to talk about in this article, though. I'm just saying I'm not the smartest dude in the shop, but that's what that's an indicator of. But you're not calling it that. But anywho, jumping over to this next story over on Cointelegraph, and it is U.S. Consumer Agency flags risk in virtual crypto economics. Economy. Sorry. So basically, the United States Consumer Financial Protection Bureau, CFPB, basically is like, hey, we noticed that people are going from these really crypto blockchain focused virtual worlds, right? Metaverses, and they're taking the currency in those worlds and then they're moving them over into the quote real world by exchanging it for fiat. And the issue there is that there's more scammers. Really, the issue is there's more opportunity for nefarious activity. But arguably, let me jump back to what my thought process was on this. My thought process is, as I've said months ago, like most of last year when Biden's executive order thing got dropped, you're going to have the different agencies and departments at the various levels of federal, state, county, and city start going, hey, this crypto thing, we got something to say about it. And 8 times out of 10, somebody owes us some money. 8 times out of 10, somebody owes us some money. Especially if we know that we can get it out of you through like legal means, and the government side having unlimited legal pockets for the legal process. 10 times out of 10, somebody owes us some money. If you got more than like 3 million, 8 times out of 10, you might not owe us a lot of money, but we're gonna get some coins. Case in point, CZ. So here you have it that this agency or this bureau, they have a rule, and it's crazy the way that they wrote this. They wrote it at the bottom. They tell you all of this other stuff about scammers and how the government head department person sees that there's a shift and things happen. It's like, yo, but where you been? Like, I got it. Y'all didn't take the virtual stuff that seriously until you realize that you could actually start like elbowing people and be like, yo, pay up. As King said, I want my taste. This is what's going on. It's going to eventually get to this point. But let me get to this paragraph about how it says the CFPB has shifted its focus towards cryptocurrencies, introducing a proposed rule titled Defining Larger Participants on a Market for General Use Digital Consumer Payment Application. The rule grants the agency oversight over larger non-bank firms providing digital wallets and payment application services. I know I didn't vote for this. I know I didn't complain about metaverses. I wasn't saying Decentraland is a bad place. I didn't say I was getting scammed. But yet somehow this bureau took it upon themselves to come up with a rule that no one outside, as far as I know, had input on, to be like, well, why do you get to say something about this? Why do you have governance of any type over it? Well, can I at least input as an actual user to be like, well, here's the relevant part? No, they just propose this thing and it's saying like, well, we get to claim domain that if you make over this amount of money, or we see that there's this level of transactional activity, you need to operate like a bank. You need to follow the rules that traditional banking institutions operate as. Think about that. A gaming platform has to operate like a bank. What? And that's basically what they're saying. I'm expecting to hear more about this. If anybody's interested, in the link for the article itself, there's a link that goes to a 62-page rule reference. And apparently they barely talk about crypto in it, but they're claiming that, yeah, this is our lane. So I'm keeping this on the radar because I think it goes towards the pattern, the trend that goes to pattern that I've been saying. More of these agencies at various levels are going to start claiming, hey, we have, some skin in the game on this. And this is what they're going to do, which probably then gets into like, they're going to start going to these metaverses and being like, hey, you guys need to like register with us and get our seal of approval as a good business. Oh, you don't got our approval. Like, you got to watch out for those folks who didn't come through our clearinghouse to be like, they got the A stamp on them. That's just an indicator for down the road, but I expect more of this to come up. Link for that is in the description. Jumping on to this next story. So Paraguay considers kicking crypto miners to the curb. This is in Cryptopolitan again. So the way this basically reads is, and what I don't like about this article, I'm going to say what I don't like about this article. They don't actually talk to any local people to be like, hey, you're a mining facility in Paraguay. What do you think about what the government's doing? What is your concern about this 180-day cease of activity stuff rule? They're not doing that. It's literally, it seems like they took quotes out of whatever the government put out as a press release, and then they're like, hey, this is what's going on. They're not quoting actual newspaper articles in Paraguay. They're not quoting actual people who work in the industry. None of that. It's just, here's what the government says. There's a whole power grid issue. This is why the government needs to clamp down, blah, blah, blah. Here's the part of the energy company. It's like, we're losing like nearly $1 million per facility. So basically you're saying you mad that you're not getting your quote due cut. And the crazy part of this is nowhere in this article is it arguing per se, what's going on, nerd up? Is it saying, well, Bitcoin miners coming to Paraguay is devastating to the economy because they're destroying the ecosystem. Why? Because Paraguay has a large portion of its energy sector built on hydro dams, which means it's green, right? So you can't argue the same thing in the same storyline of like, oh, this anti-green technology is taking up all the energy and making blackouts, and be like, but dog, they're using hydroelectric power plants. And then the other question to me is like, well, how close are they to the source, aka the dam, that when there are power outages, it's affecting the towns and the cities that are downstream of the power. Because in my mind, I'm no electrician, but if the city lights go out, even if you are connected closer to the power source, you should go out too, because somebody at the power plant is going to be like, oh, wait, the city went out, but that facility that's like 2 miles down the road is still running? Nah, something's wrong. Cut the power, dog. Cut the power. Like, if the power didn't cut off at the source, I can't see how. And again, I'm no electrician, and I don't know how big these facilities are, but something's not making sense. So in my mind, this story is an indicator of, and they also do make the point to say within this article, yeah, what's up, Crypto City? We in here. That Paraguay is pro crypto. In my mind, the energy issue, the blackouts that they're going through, the power outages, they don't give you like, was there an increase in power outages? Did y'all already had a crappy power out grid beforehand? There's none of that in this story. So I'm questioning the devil's in the details. Have you seen a significant increase in power outages? What is the rate of power outages compared to how many facilities are popping up in your major cities and within your region, right? So I think this is more of, we can go and blame the power outages on the crypto miner folks, which is crazy, because if you're having power outages the way you're having them, why would so many miners look to move to your region if you have that level of power instability? That's a confliction right there. You have hydroelectric power. You have one of the largest hydroelectric dams or something in one of your major cities, but you have instability grid coverage and like power supply. But you're saying that you're like in the top 5 places that crypto miners look to go? How does that work? So in my mind, what's going on is they're trying to make the argument of pushing the regulatory part because the crypto mining sector is a danger to the power grid. So we need to have better regulations and enforcement on the legislative slide, as well as introducing technologies into the grid that allow us to better monitor the system and collect the money through the legislative side that we want, which is, again, everyone's trying to figure out ways to tap the pockets of the various elements of this crypto industry. Are you a miner? Are you a consumer, aka trader level person? Are you a financial institution? Are you an exchange? We're going to find different ways to tap your pockets. That's all that is. That's at least my thought process. If you agree or disagree, comments is always open. Y'all know, as I say, we don't delete, we do keep receipts. And if something did disappear, that's on YouTube. That's not us. Yo, how is it that it's X number of y'all in this, watching this, and it's only like one thumbs up? Yo, y'all are, all right, whatever, man. You know what? I don't do it for the thumbs up, but damn. Like, that's wild. Jumping off to this next story. I'm a preface this to say indicator. I'm not 100% on the indication of what exactly, but I'm going to say indicator. So, Aave reduces MakerDAO's DAI collateral after proposal to completely eliminate it. Basically, what happened is Aave allowed DAI to be collateralized by another cryptocurrency. And so what then happened is, at least for the way that I read this little micro article, I think some of the users, or a sizable enough portion of the users, figured out a way to start gaming the system by using the stablecoin's derivative collateral. And so now they're like, oh, whoa, hold on, wait a minute. This doesn't seem sustainable. we need to reduce the LTV. So LTV is increasing DAI's loan. Aave is decreasing DAI's loan to value ratio by 12% points after MakerDAO added Ethereum's USDE synthetic dollar as collateral. So again, you got the token, the stablecoin, the token, and the derivative that is being used to back the token thing that's underneath the stablecoin. So now it's just like, yeah, this model isn't sustainable, and we probably might have too many people who figured it out early. We can't keep running it at this number. Indicator of expect more changes to how the Aave platform is working and how DAI or MakerDAO in relation to the different DeFi exchanges you can use it on is going to change, because people are going to start figuring out the gaming system. And like all of this stuff has a life cycle, all of it. Like, it sounds cool. Oh, you see 16. I don't even see 16, dog. I just see 1. I blame it. Yes. YouTube. It's YouTube's fault. YouTube is playing with the numbers. So yeah, for folks who are playing in the Aave pool, for folks who are messing out, with MakerDAO and DAI and stuff, like, y'all need, like, make sure you're on your P and Qs. Like, y'all know I don't do price talk because I don't even know what's what. I don't even know what Bitcoin is at right now, y'all. I'm dead ass. I don't even know what Bitcoin is at right now. Like I said, life over here, lifing. So I got other things going on that I'm not even paying attention to that right now. Nonetheless, if you're in that pool, due diligence and research, because to me, this is an indicator of other things that are probably not going to play out too well, and somebody's going to be left holding the bag. Again, link for this will be in the description. Another story that goes towards what I'm saying is the trend for how outside of the US, other governmental agencies and regulatory bodies are starting to realize there is blood in the water, and they can start tapping the pockets of these exchanges. So eToro faces Philippine scrutiny for alleged security sale. I don't know if the Philippines is gonna go as hard as Nigeria did, where they putting people on house arrest and then they putting them in jail. But again, this goes towards the thing of, hey, if we just throw out that whole like, yo, you securities thing, you got to come into our court system. All right, well, we got lawyers, but do your lawyers have the same deep pockets as the system's lawyers? Not at all, dog. Not at all. Now, I don't know how much a lawyer and all that costs in the Philippines, but if they play like how the U.S. government SEC lawyer folks play, they could just drag this joint out for like how many years, and then just keep adding on to like, oh, well, here's a fee for being late. Here's a fee for you not answering us in the 160 days, the 180 days. Here's a fee for like, I don't know what way this is going to go, but here's what I am saying. The trend is other governments and regulatory bodies or agencies are going to start ramping up how they start checking these crypto-related businesses, whether they're local to their country, and definitely if they international. 100% if they international. They're going to start checking their pockets. It ain't even no real reason to read like more than that going on in the story. So next joint, this one, oh no, you did that. Damn. Sorry, click the thing. All right. So title on this one, this is on Cryptopolitan. ZA Bank or ZA Bank launches banking services for stablecoins. I read this article and I was just like, wait, what? Hold on. Let me go through the highlights on this, right? So the TLDR, Hong Kong-based ZA Bank has announced that it will provide banking services for stablecoin issuers to boost Web3 adoption. Impact on Web3 ecosystem in Hong Kong. Remember what I said about Hong Kong? Hong Kong is the sandbox for the C state. They're mixing in stablecoins, precious metals, traditional fiat, the CBDCs. It was something else that I can't remember. And my thing was, what are going to be the gray markets and the black markets that come out of, all right, let's put all of this stuff in, this sandbox. Let's let the Westerners come in. Let's see what they do with our native, quote, local people and the different business models. Here's the example of, all right, let's see what we can do if we have a bank do stablecoin services, because now the businesses are going to look to only operate with stablecoins and be like, all right, cool, we can run through y'all now. Hey, what's going on Bitcoin Shango? So the basic idea is, let me read the paragraph. In a bid to boost local Web3 applications, Hong Kong-based ZA Bank announced that it will offer banking services to issuers of stablecoins. According to its official announcement, the online banking platform said it will open up security for fiat services, which issuers can leverage to back their digital assets. So basically, it's like, hey, we're going to hold the reserves for whatever stablecoin you have. The thing that got me in this article is it doesn't say what the reserve quote has to be. So I imagine you have to read the terms of service. Control F is your friend when it comes to terms of services and privacy policies. Control F. Search all the words you want to, try to figure out where it is in the document. So here you have it that a non-digital thing is going to be backed, reserve in a bank by another non. Oh man, I guess I said the wrong word, y'all. I guess I said the wrong word because now it's acting up on me. Well, I'm gonna still say this part through, but the idea is, oh, you for real? So on my side, I'm seeing that the YouTube feed got cut and it's buffering. Hopefully, y'all are still hearing me on the audio side of it. I'm gonna push through on this. Hopefully. Somebody hit me with a 1 or something if the audio was still playing through, please. So basically, they're offering traditional banking services by holding your reserve. My thing is, what is the actual reserve? Are we saying it's actual physical fiat? Are we saying it's precious metal? Appreciate y'all. Thank you. They don't say that in this article. So this gets into, and then who has the ability to participate in this? Is it only folks that are local too? And y'all going KYC on this, 100% KYC. It doesn't mention that in this article neither. So is it only people local in Hong Kong? Is it people who are outside of Hong Kong, as far as in the mainland of the sea state? Is it folks who are in Europe, folks who are in the States, right? It doesn't get into that, but the point being is this this banking institution that is really a online bank, it's like Chime and all of that, is like, yeah, we'll be the reserve for your stablecoin. What? Hold on. The stablecoin is supposed to sit well enough by itself. Where am I going with this? In my mind, the indicator is that this trend is being set for Hong Kong as the experimental box, and it's so far seemingly working, where they're allowing these startups, these newer age businesses to come up with various financial experimentations, and the money and the attention is there. We're going to go through the same thing in that sandbox that we went through in the bigger crypto space, as far as everyone's going to come in with their idea, and 5 years down the road, we're going to then have the culling of the how many of the businesses that started off here in 2024, 2025, how many of y'all are going to be down the road in 5 years as a more stable business. Yes, there's the whole thing about first player, first move, first mover thing activity. But at the same time, it's just like, how am I saying this? Are you going to, even if you have first mover activity, will you be in good enough favor or standing, or are you going to be able to sell enough people on your idea and maintain it? Because y'all are all kind of starting at the gate, relatively speaking. And again, if you've been paying attention to any of the stories that I've been covering out of Hong Kong, like, they're moving rapid. Like, it's a new thing every month or so. The companies that are being registered out there, it's a couple, like, what, dozen companies a day on who's trying to be like, oh, we're going to be the one. So the explosion of the number of entities is going to scale really fast. The culling is going to be even faster for how many end up not making it after 1 year, after 2 year, after 3 year. How many get it acquired for the intellectual capital, or like whatever network thing they had. Like, but this is going to be interesting to watch, and also to see like the failures of it. Like, if they get hacked, that's going to be interesting too. Next joint, this one is for an Ethereum, and it's going to be like the last one besides, what was the other story? I really need to get this one. So basically, this is a proposal to deeply change Ethereum structure, gathers backlash. What's the truth? So basically, someone proposed the whole thing of um changing how the new users who look to be stakers in the Ethereum platform will get a lower, what do they call it? Reduce the incentive for the newer stakers. When you start playing with all of these different like tokenomic things and economics in order to keep the capital in the network, eventually there comes a part where no matter how much rigging you do on the parameters to bring it in, eventually that method, that solution comes to a fault or a breaking point. And I think that's what's going on with Ethereum's staking model. The idea that, all right, we had all of these older stakers and the new folks after this point, you guys are going to have a different incentive thing where it's lowered. So arguably, there's going to be something that comes up about the older accounts, the older stakers, and they're, in my mind, indicator of there's something bigger wrong with the staking model and the verification thing, the consensus mechanism that Ethereum is using, if this is what they just now did. So at some point there will be more changes. Now, it doesn't get into the whole thing, or at least I didn't read enough of it to be like, oh, this is a definite guarantee. They proposed it. The community is like, hey, what the hell are you doing? This is stupid. You're gonna screw you're gonna screw the adoption going forward, and it's only gonna be the older folks who will have a better incentive to stay in, because their stuff is gonna be worth more than the newer folks. And the newer people who would look at it would be like, well, I don't want to mess with that because that's not the same amount as blah blah blah. And this is the whole, growing pains part of the technology, right? But at the same time, there's this whole other thing about human nature, greed, protection of vested interest, and it makes me wonder the direction that Ethereum will actually make it to. due diligence and research if you're doing things like staking and stuff within the Ethereum network, if you're playing around with any of the Ethereum-based derivatives within the ecosystem, because I imagine if that thing does get proposed, it's going to affect the whole ecosystem and the derivative tokens and coins and blah, blah, blah that come off of it. Just my thought process. I could be wrong. Last story before I got to get out of here because I don't want to mess up the stat bros that come on after me. Also, shout outs to the content cousins, the Simonson family. Shout out to King and Zay, of course. Shout outs to the rest of the folks like Black Ruin them. I know I don't do price talk. If this is your first time catching my segment, we got other folks who do all of that. I'm just not that guy, and I'm okay with that. Jumping into this story, Wall Street banks want to buy Bitcoin directly. Remember the thing I said earlier about that case with Coinbase and how, well, this don't count as a secondary market. Wall Street and the traditional TradFi folks are always going to look to find ways to where they can either enter into a market before it becomes mainstream public, and they'll play around with it on the back end in the closed rooms and everything. And then once things get to a level of public facing, it's like, all right, well, we've been doing blah, blah, blah for this long. And, we go back in the day, like, we go back like kneecaps, blah, blah, blah. Like, so here you have it. The basic thing is Wall Street is looking to go to miners because this whole thing with the ETF, right? What King was saying for how long is like, yo, they're going to end up having to figure out how to do the rehypothecation because it's not going to be a 1-to-1 ratio for any of the ETFs, right? This is them trying to secure their bag. If you're into mining, I hope somebody is paying attention to this. Let me know what y'all are seeing. I have some things that I've been saying for how long, as far as like, if you a regular Joe Schmo, you need to start figuring out who's doing the mining thing at your level, because this is going to be, we're going to jump into the era of KYC free crypto, KYC free Bitcoin in particular, which based on another conversation, I'm hearing that it's going to be a difference between that stuff. But that's the last story. Link is in the description. Sorry for the stat bros for running over on time. I think I'm going to end up, as I said, this segment is brought to you by CJ the Smart Guy. He's a CPA. Link for him is in the description. And as I close out to say, have a P over B day. If it can't be a productive over busy day, at least be in a safe space, in a good place, and with good company. And from one human to the next, that's the best that I can wish y'all. All right, y'all. One. Woo. Okay, where are you? My bad, Stack Bros. My bad.